This is our Forex blog for January 10th, 2012. And like we do most days, we really want to buy the strongest currencies versus the weakest, and we want to sell the weakest versus the strongest. We have each currency compared to every other one, and on the top we have a histogram, which uses 5 of our best statistical trend tools we developed over the last 5 years, and 3 of them measure the direction that the dollar is moving versus the rest, using different time frames and different methods, and 2 of them measure the intensity of the direction. We average it together, so you have one simple to read value of the real-time momentum of each currency. Underneath that we have the daily, weekly, and monthly statistical trend, which each of these is made up of 3 different methods, and we average it together to give a better reading. So if you have weakness in the dollar, but the weekly and monthly trend is up, then it's a little bit risky to sell the dollar. You can still do it, and sometimes trends reverse. It's less likely to last for a long time. In other words, the longer term trend is likely to reassert itself at some point, which from 2 to 3 it does. You have a little bit of weakness and hour of strength and so forth. When all the time frames are in the same direction, like the Australian, then typically that trend is more likely to continue. The Swiss is pretty much weak on all time frames. The Euro was, with brief amounts of 2 hours of intense strength, a little bit of strength here for an hour, and so forth. So how you use this is you really want to find patterns where you have a lot of weakness in a currency where the longer time frame trend is down, and then the counter trend move has almost no strength. I like to say visually 1/2 or less. In this case, you can see that. Then this momentum to the downside is likely to continue. So it would have been good to look for a sell in the euro coming up to 10. Now, what was very strong coming up? What currency was super strong during that time? We can see the New Zealand from 8 to 9:30 had quite a bit of weakness, but the Australian didn't. So coming up to 10, between these 2 bottom currencies, the Australian had less weakness, only for about 10 minutes here. Each of these bars represents 5 minutes, and before that, almost nothing. So basically, you could be looking at 10 to sell the Euro New Zealand. Let's bring that chart up. This is not one that we leave running throughout the night. And actually, this started to break down even before 10. You can see it went up with a lot of momentum during one 5-minute bar, and then it kind of went sideways right here. If you sold the breakdown right here, you can see it fell from 6,100 all the way down to 60.60. It fell 40 pips. And then you got a nice little pullback right here where it fell 10, 15 pips. But basically, in a nutshell, that's how you use our currency meter. The CAD, strong on all time frames today, and coming up to 10, this one actually had a little bit of weakness here, and the weakness was more than the previous momentum. The pound had some strength, but the daily, weekly, and monthly trend is down. You can still trade pairs like that when you have a lot of momentum followed by very little weakness. That strength oftentimes resumes, but when the daily, weekly, monthly trend is down, you don't know if that strength will resume for 5 minutes, 20 minutes, 30 minutes, or in this case, almost 2 hours. But the euro pound, because the euro was weak and the pound strong, also very likely to go down during that time, and you can see, it did. This is a pretty big move for this currency that has lower volatility. The CAD, was consistently strong all day. The daily trend's very strong. The weekly, monthly just shifted up. They were yesterday down, as you can see. So it could potentially be up too much. So a currency that's strong, keep in mind that actually we have 2 tools that measure statistically how far a currency is likely to go. One of them is containment bands, the other one's range projection. If the market's above the upper daily range projection high or the upper containment band, then it's usually risky to buy a currency. You want to buy a currency on a pullback when it's in a safer zone. But the euro was weak. The CAD was also strong. Let's take a look at this currency. It's also very likely to fall coming up to 10 o'clock or so. As you can see, it's kind of going sideways. If you got short with your stop above a few pips above the high here, you never got stopped out, and then it eventually did fall 40 pips. Typically what we do when you're looking to sell, you might have shorted it right here with your stop above there. It's kind of going sideways. I would have moved my stop down a little bit, probably lost 6 or 7 pips there, got short again, because you never know what's going to happen. It's always best to take a small loss and get back in than it is to take a big loss. And sometimes you take a small loss and you don't get back in, so you're left with a small loss and you're looking for other trades in other currencies. But in this case, you can see you're short at 30.11, and it comes back down and goes sideways. You probably want to get out of half your trade somewhere in here as it goes sideways. You've locked in 20 pips, comes down, and it forms a double bottom there, is not able to break it. So you probably made 20 to 22 net pips on that. If you lost 7 pips on the previous one, you're left with 15 pips net on the 2 trades. And that's trading. You're never going to have 100% wins. Some days are easier than others. Some days are impossible, and some days are slightly hard. Here you can see the Swiss also consistently weak today, especially when you see a pattern like this with extreme weakness, the weekly, monthly trends down, followed by very little amount of strength. That weakness is likely to continue. And in this case it does, but only for about 15 minutes. So around 7 you might have been looking to sell the Swiss, and the Australian had the exact opposite pattern. The Australian Swiss is very likely one to be buying around that time. But as you saw, the Swiss was only weak for a brief amount of time. So if you got into this trade and it went up, you always want to move your stop up a little bit when currencies go your way. And by waiting for the price to break out, you're actually getting into the trade as it's going up, and so therefore the momentum of the move, also in my opinion increases your odds. So you might be in this trade at 97.98. And it got all the way up to, it didn't go up too many pips, but that's enough to probably move your stop up a little bit, and you would have got stopped out here. Obviously not the best trade in the world, but the point is, when trades don't work, you have small losses. This one has a little bit wider stop. As it goes up and kind of goes sideways, you move your stop to break even, and most of the time when it comes back up here and can't break the high here, and you don't have plus 80 momentum, I would have just got out of this trade with a small win. Again, some days trading is easier than others. Earlier in the day when the Australian was very strong and the yen and the dollar were both weak, you had huge and very easy trending moves, as you can see last night. Just 25, 30 pips, 50 pips. You pull back right here, goes up another 75 pips. And one thing to always watch on our charts, the upper containment bands usually contain price, and so this is an area where it's a danger zone to continue buying. And then we have a 3-hour trend reversal signal right here, which usually within 3 to 6 hours is the high of the day, and the price is going to reverse. So once you see one of those, you can still take one more trade to the long side, but then start looking for counter trend trades.